everyone. Today I'll be dealing with the topic, the fifth head of income. That is, according to Income Tax Act, we have 5 heads. What are they? Number 1 is income from salary. Number 2 is income from house property. Number 3, income from profession or business. And number 4, income from capital gain. And next one is income from other sources. This is the fifth head of income, that is income from other sources. Any income which is related to salary belongs to the first head, that is income from salary. If you are an employee, the salary you get, the allowances, the perquisites you receive, all those are included in first head, that is income from salary. And if you are if you have any rented house, okay, that let out house or self house, all those income relates to that rented house will be comes under the second head, that is income from house property. And number 3 is if you are doing any business, if you have any profession, you don't have any employer, you are the employer, right? So any income out of such profession or business, that comes under the third head, that is income from business or profession. And fourth one is related to capital gain, that is divided into long term capital gain as well as short term capital gain. Okay, that is related to sale of an asset, sale of a long term property, short term property, that comes under fourth head, that is income from capital gain. And finally we have income from other sources. What do you mean by other sources? Any income which is not apt or belongs to any other heads of income, that we will take into consideration and put this into income from other sources. That is the fifth head. Okay, so what is income from other sources? What is the meaning? Income from other sources, that is income of an assessee. Who is an assessee? Assessee is a person who pays the tax to the government. Okay, so income of an assessee during the previous year. As you all know, the difference between previous year and assessment year. Okay, we will, in the assessment year, we will assess the income of the previous year and tax on the basis of the income of previous year. Okay, so income of an assessee during previous year which is not attributable to any particular head of income is assessed under the head income from other sources. If it is not related to any salary, if it is not related to any business, if it is not related to any house property, if it is not related to any sale of an asset, such income will be included in the fifth head, that is called as income from other sources. And section 56 subsection 1 of this act provides that if there is a specific head applicable for a particular income, it cannot be assessed under the income from other sources. Example, if you receive any amount in the form of salary, we can't take that into in this head. Okay, that comes under income from salary. Okay, which is not attributable to any other particular heads of income, that we will take into consideration and put into this particular head. So that income from other sources is also called as residuary heads of income. Why? It cannot be assessed under income from other sources. Any other income which can be included in other heads of income can't be attributable in this particular income. So that we can say income from other sources can be also called as residuary heads of income. So what is income from other sources? Tell me, what is income from other sources? Income from other sources meaning?
Any income which is not attributable to any other heads of income or a particular head of income.
Particular head of income, that can be called as income from other sources. So it can be also called as residuary heads of income. So what are the income chargeable under other sources? We have deductions and we have certain income which is to be chargeable under this head. What are they? Number 1, dividend. What do you mean by dividend is all about? Dividend, if you want to invest in any particular company in the form of equity shares, preference shares, debentures or any other securities, you will get either dividend or interest. If it is dividend you will get, right? So if it is dividend, that is included under income from other sources. That is dividend that you receive, that can't be included in income from salary, income from house property, income from business. That is not your business because you are investing into some other business, right? so that you will earn dividend from some other company. So dividend, we can't include dividend in any other heads of income, so we will include that particular item in income from other sources. So dividend from an Indian company, if it is an Indian company, you will get exemption up to 10 lakh rupees. If it is 20 lakh rupees, you can deduct 10 lakh rupees, and the balance 10 lakh rupees you can charge. Okay, so dividend is the first thing, and you will get exemption up to 10 lakh rupees. Number 2, winnings from lottery, crossword puzzles, gambling, betting, card games, or any sort of such games. We can't include all these items into any other heads of income, so that if you receive any income out of these activities, you have to include this under income from other sources. Number 3, fund of employees. What is fund of employees? That is related to annuation fund, contribution to the provident fund, contribution towards a provident fund by the employee towards his provident fund. That is also fund. At the time of retirement, you will get that amount, right? So any fund of employees, that should be included under income from other sources. Number 4, interest on securities, if not chargeable under the head profits and gains of business or profession. If you can easily invest your own money into your own business. Okay, that means maybe you will be having more than 50% shareholdings in your own company, so you'll get dividend also, you'll get interest out of your securities. Okay, if it is not included in your, in the fourth head and the third head, income from profession or business, you can include that in fifth head. Okay, that is income from other sources. Income from machinery, plant, furniture, income from machinery, sale of machinery, sale of a plant. If it is not included in income from capital gain, you can include that in income from other sources. And income from composite lending. What is the difference between composite lending and subletting? Composite lending means you are the sale of your entire business together. That is known as composite lending. Or you can sell your particular machinery wise, land wise, etc. Okay, if it is a bulk sale, the full business together, that can be called as composite lending. Then you will get cash. Okay, that comes under income from other sources. And the last point is very important, that is a gift of money exceeding rupees 50,000. From whom? That is very important. From whom you receive the money. Okay, you have certain relatives, you have friends, we will exempt something, right? So gift of money exceeding rupees 50,000 received without consideration by individual, HUF, or any other person. So if it is 40,000 rupees, you can't include that. If it is more than 50,000 rupees, gift of money exceeding rupees 50,000 should be included under income from other sources. If it is 49,000, if it is okay, it is okay. If it is 50,001 rupee, you have to include the full amount of 50,001 in income from other sources. So these are the income chargeable under income from other sources. Then receipt without consideration. That is, you will get prize money, you will get anything free of cost. That means you don't have to pay anything in return. That is called as consideration. In that case, what is the rules and regulations? Any sum of money including gift, you can avail gift out of some competition. You are not paying anything for that, right? So any sum of money including gift in cash or check or draft up to rupees 50,000 is exempted. If it is 50,001, that is included under income from other sources. Number 2, immovable property such as land and building. If it is land and building, you are getting free of cost what? A land, a building from your parents, from your grandparents, etc. Okay, and you are not paying anything for that. No consideration out of that. So if stamp duty value, when it comes to immovable property and movable property, and provided you are not paying anything for that, you have to take into consideration the stamp duty value. If the stamp duty value exceed rupees 50,000, stamp duty value will be chargeable to tax. If it is 49,000 worth land, that is okay, you will get exemption. If it is 80,000 rupees, which is more than 50,000 rupees, that can be included. The stamp duty value can be included for the tax purpose. Then immovable property received for the consideration less than stamp duty value. Stamp duty value, if suppose if it is a machinery, okay, other than any movable, immovable property, sorry, it is a land and building, any movable property, and received for a consideration less than stamp duty value, okay, less than stamp duty value. Stamp duty value less consideration is taxable, because you have to calculate the difference between stamp duty value and the consideration amount, okay, and that amount of it is taxable if this difference is more than rupees 50,000. If it is not 50,000 rupees, if it is below 50,000 rupees, you don't have to pay tax. The difference, if it is more than 50,000 rupees, you have to include that amount in income from other sources. And the next point is very important. With effect from 1/4/2018, the difference between stamp duty value and the consideration is taxable only when the stamp duty value is more than 105% of the consideration, okay, 105% of the consideration. Then next one, movable property without consideration, you have to calculate the fair market value, and if it exceeds rupees 50,000, that amount is taxable. And movable property for consideration less than fair market value less consideration is taxable. You have to find out the difference between the fair market value as well as the consideration amount, and if the difference is more than 50,000, that is taxable, okay. So we are talking about the receipt without consideration, without paying any consideration, and you will get exemption up to 50,000 rupees if you receive any gift. So from whom? Okay, that is very important. Gift received from a relative, it is fine, okay. So relative is defined under Income Tax Act, we have a definition. Number 2, gift received under will or by way of inheritance, gift received on the occasion of marriage, okay, marriage of an individual, gift in contemplation of the death of the giver, money or property received from a local authority, then money or property received from any fund, foundation, university or educational institution, all those are service sector, okay. Then money received from a charitable institution which is registered under section 12 subsection AA. So situation where gift is not at all taxable, but it is taxable in certain cases. Relative for the purpose of tax, okay. If you receive money from relatives and if it is less than 50,000 rupees, that is not at all taxable, okay. And there are certain cases which is not at all taxable, okay. Number 1 is gift from relative. What do you mean by relative? How can you define relative? That is divided into first level and second level. First level is your immediate relative, that is your father, mother, sister, brother, children or spouse, your immediate relative. If you receive money from your immediate relative or first level relative, that is exempted, you don't have to pay tax. And your second level is not your immediate relative, it is spouse's brother, spouse's sister, your grandfather, spouse's sister's husband, like that, it goes into second level, that is also exempted from income from other sources. And like income from salary, income from house property, income from capital gain, income from profession or business, you have certain deductions allowable under this head also. Number 1 is, in case of interest on securities or dividend, any reasonable amount by way of commission for the purpose of realizing the interest. Initially I told you the dividend or the interest on securities that you receive is included in income from other sources. If you want to realize that amount, you paid some amount for the realization of that particular security, or if you pay any expenses out of that, that amount can be deductible, you can reduce that amount. Number 2, interest on loan taken for the purpose of investment in securities. I wanted to invest 10 lakh rupees into this company. For that purpose, I took 5 lakh loan, okay, from another bank or any other institution. So I have to pay interest for that loan, that can be reduced. Then, in case of letting of machinery, I want to let out my machinery and to earn some amount. The expenses related to that particular machinery or movable property such as current repairs, insurance premium paid, depreciation, ground rent, minimum rent, etc. All those expenses related to that particular machinery can be deducted. And standard deduction, if it is family pension, you have standard deduction, that is 1/3 of family pension or 15,000, whichever is less, okay, deduction which is based on family pension only. That is the standard deduction. And any other expenses incurred wholly or exclusively for the purpose of earning such income. So basically you have to gross up the amount. That is calculation of TDS is very important under income from house property. What do you mean by TDS? If you have the salary of rupees 25,000 rupees, the employer will deduct your TDS amount and give you back the balance amount. So what is that TDS amount? In certain cases, you have to gross up that TDS amount. That means the income or the interest on debentures that you receive is rupees 9,000. Suppose 9,000 rupees is the income that you receive. Okay, that is income after TDS amount. Okay, as per the Income Tax Act, interest on debentures of TDS amount is 10%. So this is 90% of amount. Okay, so the amount that you include in income from other sources is not 9,000 rupees. You have to gross up that amount. How can you gross up that amount? The formula is this: gross up income equal to net income. What is your net income? 9,000 rupees. So 9,000 rupees into 100, you have to convert that into 100%, divided by 100 minus TDS rate. 100 minus TDS rate is 10%. So 9,000 divided by 90 into 100, then you will get 10,000 rupees. So you have to include 10,000 rupees in income from other sources. That is known as grossing up. Okay, so when you talk about TDS, the deducted amount, it is not deducted amount, the gross up amount you have to include. So what is the final calculation? It is an example for the computation of income from other sources. That is dividend. You will get exemption up to 10 lakh rupees. If it is 20 lakh, you have to add that amount. Interest on government securities. If it is interest on government securities, you don't have to gross up. Okay, you have to include that full amount, that is 14,000, and any expenses related to that particular transaction can be deducted. Okay, so if there is any collection charges, that can be deducted. And winning from lottery and you receive the amount of 77,000. Suppose winning from lottery, and suppose lottery amount is 1 crore rupees and you won't get 1 crore rupees, right? Because the government will take TDS amount. For example, the winning from lottery, the amount is 30%. Okay, 30% is the charge. So you will get the amount after deducting the TDS amount. So what you have to do is you have to gross up that amount. So that interest received, that amount received, divided by TDS, 100 minus TDS, that is 70%. 30 is the TDS charge, divided by 70 into 100, and you have to include that amount in income from other sources. That is the amount. Winning from lottery, that is 70,000 is the amount received out of lottery, divided by 70 into 100. Then the total lottery amount is 1 lakh rupees. You have to gross up that amount. Then winning from card games, 25,000. Family pension, I told you, standard deduction is there. For family pension, that is 1/3 or 15,000, whichever is less. Okay, so 1/3 of 24,600 or rupees 15,000, whichever is less, that is 8,200. 1/3 is less, so deduct that amount, balance is 16,400, and the total amount of income from other sources equal to 1,55,050. So this is just an introduction part of income from other sources, and in the next class I will be continuing with the problems and other deductions. So thank you so much.